Hi again and welcome back. If you've made it this far, well done. There's been a number of videos to get through and we've covered quite a bit of ground, so well done if you've made it this far. In this video, we're going to do an interesting thing and combine the last four examples that I've shared with you. And the reason we're going to do that is that it's very common to actually have all four tax minimization techniques in one tax return. And so you've seen the effect of having them done individually. Now let's have a look at the effect of when all four of them are done in the same financial year on the same business. So once again, in this particular case, we've got the same hypothetical business that's pulling in that's on track in the current financial year to pull in 1.25 million revenue. And here are the numbers on the profit and loss for that business. And now in this case, let's say that the business owner also decided to defer invoices, so defer 100K of invoices into the next financial year. So therefore, revenue comes down this financial year by 100K. Let's say we've also written down 50K worth of stock this financial year. Let's say we've also brought forward a purchase from next financial year into the current financial year. Let's say it's that car. And let's say we've also moved 50K of this of the funds this financial year into a lower tax structure, let's say into superannuation. So we've done all four of these techniques that we mentioned earlier. Now let's have a look. So first of all, we can see that there's clearly a big difference in EBITDA. And right now, hopefully from the last four videos, you'll probably be very shocked to see the big difference in EBITDAs. You can clearly see the tax position. So you can clearly see that, given all the numbers, that by employing all four tax minimization techniques, they work. We've actually got a tax bill to the ATO of just under 62K this year instead of 115K. So, from a ordinary tax accountant's perspective, that's a huge win. You pretty much halved your tax bill. So, we've saved $53,000 in tax. So that would be, congratulations and cheers all around for the most part for most tax accountants. But now that you know where we're about to go with this, let's have a look at the effect of this on our business value. So now let's have a look at this and open it up. And again, let's use the same earnings multiplier, 2.5. And not only have we halved our tax bill, but we've actually almost halved the business value. So we've gone from a business value where the owner is walking away with almost 1.15, let's say almost 1.2 mil, just under in business value. So very, very nice walk away. Instead is now only walking away with $618,000. So a huge difference of over $500,000. And then again, as you've seen on the last videos, the story doesn't stop here, because not only have we foregone this much money in business value, but also because of the way we were doing our tax planning, we also didn't book this profit on our current financials. So we factor that in. Let's have a look at that. So essentially, look at all the numbers again. The net sum is that we are 698, almost $700,000 better off keeping our current financials as they were and paying more tax, but booking extra profit and getting a higher business value, almost $700,000 better off than trying to save $53,000 on tax. Or in other words, if you try to save $53,000 on tax, you would have foregone over 10 times that amount, well over $500,000 in business value. So for all of these reasons that we've outlined in these videos, I hope we've shown you that we believe that it's better to grow with the business value in mind rather than trying to save tax come tax time. Grow with the business value in mind. That's it from us. Thanks for making your way through all these videos. I hope this information has been useful to you. I hope you've also been able to read through the Rich Exit, Poor Exit ebook, and hopefully both the spreadsheets and these calculations and walkthroughs and all the things mentioned in the ebook actually bring all the pieces together for you. And please come and contact us at McNamara & Co. if we can help you with your tax planning and your business growth.